Hello, it is Friday. It is the 3rd of August, 2012. Let's take a look at gold. Let's take a look at silver and the choppy nonsense that the short-term charts happen to contain. Starting with gold, 1623 is a significant level for it is a Fibonacci retracement from the highs of 1791 that was established at the end of February and the low of 1527 twice hit. Second time was hit in here, and the first time was hit at the end of the year 2011. 1623 was heavy support. You can see it's been heavy resistance on 4 different occasions. And on each hit, this is where the bottoms happen to be. And we don't even know if this is going to be the bottom. But if it is, it would be substantially higher than the previous 3. But tops and bottoms are known after the fact. For example, you can say right here, oh, this is the bottom. This is the bottom because we've had this nice double green candle going higher. Yeah, but you need to establish a higher low and then go higher. And you didn't establish a higher low. You went down here. So you don't know if it's going to be the top or the bottom until after the fact. If, of course, this is the bottom and it does bring it here, you would think that it increases the chances of taking it out. And it probably does. But you're also in a nonsense market where it goes above the 18 average band, then below it, above it, and so on and so forth. Gold weekly time frame is the next chart. Fibonacci analysis is from this high, which was placed at the end of Labor Day of 2011. And then 3 periods later, so in October of 2011, it found this bottom. So 4 periods, it went from point A to point B, and for the last close to a full year now, we'll say 10 months or so, it has been just in this sideways nonsense of a mess from about 15.25, 15 and a quarter, up to about 17 and 3/4 or 17.75. But also for the last few months, it's been below this significant resistance line, which is the bearish line. You stay below it, then you're in a bearish situation from point A to point B. However, there's only been one wave lower. This was the only wave that went lower, which thus took a triple bottom test, or the triple test of this and this, and it's just been doing the sideways nonsense. The 18 average band has caught up with it, and it's pretty much starting to flatten out because it's just doing a whole bunch of nothing. Of course, I'm extremely confident that it's going to continue to go higher, and that's based on fundamental reasons for, well, what the dollars are, how they're created, and all those essential items. And if you don't know how currency is created, I highly recommend doing so. Money as Debt, Zeitgeist Federal Reserve are 2 good videos to explain how the currency is created, as well as a book, The Creature from Jekyll Island. If you do a Google search for that, and you can get a printable copy up for free. Do a Google search for it, maybe free copy, The Creature from Jekyll Island, PDF. You'll find it. Okay, so that's gold. Now let's move in towards the silver chart. We'll start within the daily time frame. Within the daily time frame, it's just trying to reverse the trend. Every single time it's gotten above the 18 average of closes, it's made a deeper pullback than you'd want to. And here, it had a great, decent size move above here. The red candle definitely was a concern, although it wasn't guaranteed to be such, and it did proceed to one more leg lower. The second time, it barely got above it, but that's why you'd be like, okay, 18 average of closes, that's where ideal support would be, but it wasn't support, rather it was resistance. And then in here, okay, 18 average of highs, 18 average of closes, nope, just a bunch of nonsense movements, to say the least. Now, gold has tested their Fibonacci level 4 times here at 30. Silver's pretty much did it once with a pierce below. 29.91 was the high. The actual Fibonacci level is pretty much 30. Now let's take a look at it from point A to point B, this being point A, this being point B. And to do this, we'll take a look at this on the 10-hour time frame. Again, a bunch of choppy nonsense to say the least. You had major resistance at a level that, well, you wanted to find support at it, but that didn't happen, but nor did it break down after finding resistance at this level. Pierced below this mark in here, but you didn't find support, and now it's this third last candle. It went above it, but then came back down. Now it's back above it. Choppy to say the least. On the weekly time frame for silver, the 18 average of closes caught up to today's high, or yesterday's high, or sometime this week, I should say. And this is a bunch of nonsense action to say the least. But the way I look at this, if you're new into silver, or if you're just waking up to how fiat currency is created, and you want to protect yourself, then quite frankly, this is, to me, a gift to be able to not get higher prices. And quite frankly, if that's the case, and you're wondering, well, is it a good time to buy? Is it a good time to sell? It's time to do your own due diligence, to look at everything that you can find. Personally, myself, I would be heavily into buying silver if, of course, I didn't have an inventory. I'm personally waiting for either a significant breakdown below here, if of course it happens, or for confirmation of a breakout, and I need at least a clear break above the previous high of 37.5, if not even the significant 38 level. And I'll be waiting to either buy on strength or buy on weakness. That's the way. So anything in this little area in the circle part, to me, is personal nonsense. But that's because everyone's got their own different plans, everyone's got their own different situations, and you got to play them accordingly. So if you listen to somebody saying, oh, this is a good time to buy, this is a good time to sell, this is a good time to hold, well, maybe it is for them, but that might not be the case for yourself, though. As far as the trend line is concerned, this is the significant trend line. It's still got a decent ways to go, but the volatility, as you can see here, extremely tiny right now, and it's going to change at some point, but well, it's been tiny in here and it's been 2-3 months, so how much longer is it going to be? I'd have to think at least the rest of August. But you look at the size of the movements in here compared to the size of the movements in here, much tinier, to say the least, as the last month of July was one of the lowest volatile months over the last 100 months of silver. So yeah, okay, so let's now take a quick look at some historical charts. The last video, I was looking at the 10-hour chart within this baby in here that was consistently finding support at the 18 moving average. This is what bull markets do. And on the one after that, we're going to start 18 periods before the end of this. So somewhere around here is where the next one is going to start. There's 6 of these charts in the information link down below. The directory for all the charts that I used will be included. I'm just trying to find this chart. Here we are. And this is what occurred afterwards. So things got a little bit differently within the bull market. Before, it would have small gains and would hardly retrace at all. This time, it managed to get up to this 18 average of, or excuse me, the upper band. And the Fibonacci levels that I'm using was from point A to point B. Now, I could have used the 17 level, and on deeper pullbacks, you would. However, this was the only time that it managed to go below the 18 average, and for the 18 average to go declining on the 10-hour time frame. So therefore, as it's going lower here, you know this is a low, you know this is a high. You find significant support on multiple occasions, and then you break down below. See, what bull markets do is they don't find resistance. Well, they sometimes find resistance, but bull markets will break above it here and then lift higher. Now, of course, it would be bullish and bearish back in here for the market to sell off, and it didn't. Because it would have been bullish to come back like this and then take it out. So when I talk about these levels where it might be a time for the market to go higher or lower, that doesn't necessarily mean that is going to be the case. For if one were to have made a short play here, then they obviously would have lost. And one of the things I mentioned here is what you're going to find is A, you're going to find the resistance, which didn't occur. you're going to have a huge fast breakout to the previous high. Well, it took many periods, so no, that was not fast. Or you're going to find resistance at this area with a pierce above. For that to be the case, then say it ends here, it's got to sell off pretty fast and then make it down this line. So that didn't occur. Or maybe find support at this level. Well, 2 candles found support here. A bunch of candles found support here. And then as it broke by this resistance field, obviously it had a nice gain. And as you see this chart during this point on December the 3rd, there's a lot of reason to think that, well, do we really need to find resistance at this level for anything more than maybe what would be 60 or 70 cents as the bull market was in full force, yada, yada, yada. Well, we'll take a look at that next chart afterwards. But the answer was no, it kept going to the upside just a little bit before it sold off. And I'm going to end today's video, and I'll talk to you later on. Bye-bye.